Press the bell icon on YouTube and don't miss another update.
Hi, welcome to Economics. The Reserve Bank of India has cut interest rates for the fourth time this year, and this time it's an unconventional 35 basis points. That is not the only unconventional or unexpected thing the bank has done. It has lowered the growth forecast for this year for the third time, and this time it is 6.9%. It doesn't come as too much of a surprise though, because the bad news about the economy has been on our front pages day in and day out. And the interest rate cut is seen as one of the big stimulus the bank can give to try and revive growth. But is that good enough? And is that the only thing the economy needs right now? To discuss that and more, I have with me Professor Eli Patnaik. Eli, you've talked about transmission before in one of our previous episodes and what the bank needs to do for these interest rates to trickle down, lending to improve, liquidity to improve, and all of that. But there is also another element which you talk about in your latest piece today when it comes to reviving growth and what needs to be done by the government. Because just a rate cut on its own will not boost growth. Tell us why.
So, you've got this question, which you correctly said, of transmission of monetary policy, and that has been very limited. I mean, we still are waiting to do the reforms that are required so that monetary policy transmission happens. That's one part of the story. There also the government has to play a role. So, if you don't have a competitive banking sector, you just have a very public sector dominated banking sector where the RBI tells these banks to cut rates rather than it being competitive forces of the market and other banks or private banks being in the system that cut rates. So that needs to happen. There needs to be a bond market. There needs to be a financial resolution corporation. So that's part of what the government has to do. But what I'm talking about this time is that actually monetary policy can only do so much, and there are other things that need to be done. Now, it's not as if nothing has been done. We've done the IBC, we've done the GST, and these are big, bold reforms. The problem is that a lot of the times things are being done. For example, I talk about taxes. Things are being done without taking into into consideration what is the impact of these on the economy. I mean, as the RBI correctly says today, the first biggest priority of the government has to be to revive private investment. The government neither has the capacity nor the fiscal space to lead investment in India by doing public investment. So it has to revive private investment. It has to create an environment in which millions of entrepreneurs all over the country feel optimistic that they can invest something and they can make a livelihood out of their business. Now, for that to happen, one of the departments that has an influence on everybody's lives and certainly on businesses and the business environment is the tax department or the Department of Revenue. So you have the CBDT, CBEC, and then you have the Department of Revenue where proposals come from that department. A lot of the time that department offers proposals which can increase the amount of taxes, which is very fine because that's their mandate, that they want to increase tax collections. Sometimes they're proposing tax rates, sometimes, taxes like taxes on transaction, the securities transaction tax, this time the tax on the super rich, which has affected foreign portfolio investors as well. And what has failed to happen is an assessment of what those will do to GDP. Now, remember that it is the tax department which is coming up with this, and the tax department's job is actually to focus on how much taxes it can collect. So it can well be, we can remember our Laffer curve theory that if you increase tax rates too much, you might not even actually get more taxes or tax revenues. But let's forget that for the moment. What the tax department does not do and is not even asked to do is to assess the impact on GDP.
Yeah.
Nowhere in the world. Okay, so tax administration's job is not to assess the impact on GDP.
So their job is just to ensure more and more taxes are collected.
They
so that
collect
revenues go
taxes, yeah, and and in the process, if when you raise taxes, your compliance starts going down. Then you say, okay, give me more powers so that people who are evading taxes can be caught, and so the tax department ends up, raising taxes, going after people. Now, typically it used to be the Department of Economic Affairs that would, examine these proposals, look at what impact they have on the economy, on investment. So, for example, you put this tax on the super rich that affects fund portfolio investors. They pull money out of stock markets. What is the wider impact on the financial sector, on investment, on the economy? Or when you, even going beyond tax, the CSR, the penal provisions of
jailing people or fining people.
Yeah, when they don't spend the way they're supposed to under their corporate social responsibility. But it's also something which you need to think about. What are the wider implications of this on business sentiment? Because a lot of what is happening, and RBI has this time reduced its projection for the first half of the year to below 6%. I mean, it gives you a range, but you always read the lower bound of the range. So it's not expecting high growth in the first half.
But they're also hopeful that second half will pick up.
But how? So the question is, how will the second half pick up? You look at the business environment, and it's today, there is gloom in the business environment. And I think that has crept through in the RBI's policy. So the question before the government is, what do we need to do? Is the interest rate cut going to be sufficient to improve sentiment in the business environment? Talk to people. Doesn't look like it's only a question of rates.
You talk about heavy lifting of policy changes that have to be probably resorted to by the government. And we know some of these are recent issues, some issues have been piling up. So if you can pinpoint some of those issues which you think are the heavy lifting the government will have to do, because we know that the finance minister is having meetings with industrialists and business leaders to, she says, get feedback from them in the aftermath of what has happened in the budget and all of that. So what is this heavy lifting you're referring to?
Let me continue on the taxes and the heavy lifting on the taxes. So today you have a shortfall on direct taxes. Okay, you have a shortfall where you might respond again by saying that, oh, I need to raise tax rates. The heavy lifting the government needs to do is to realize that the rest of the world has cut corporate taxes. The rest of the world has gone down to about 15% now, and in the first
we have promised 25%.
We promised 25% in March 2015. We said that in 4 years we'll go down to 25%. We've gone down to 25% for companies that have a turnover of up to 400 crores, but not for everybody else. Today we need to go down even further. Then we need to think about how we can reduce evasion. But it cannot be that India becomes practically uncompetitive for a large company. We want investment. We pretty much keep saying, let's open our doors to investment, foreign investment, domestic investment. As I said, it's about those millions of entrepreneurs all over the country who should feel that, look, if I invest money, then I'm going to make money. I'm going to make a livelihood out of it.
So, if we want to say it in clear terms, are we talking about rolling back any of the recent announcements?
They might think about rolling back the tax, the super rich tax that has hit FPIs. Okay, because perhaps that was unintentional, because about 40% of FPIs are trusts or not corporates, and perhaps that was
sovereign entities,
sovereign wealth funds. So perhaps that was unintended. But I'm not just talking about a single thing. Any policy change that you go forward with, you need to assess its macro implications. you can't go, reforms are not something that can be done like as a laundry list, as a list of separate things that you are doing because each one sounds good. Many times there are things that will sound good on their own. I mean, the sovereign bond issue, okay, we've talked about it earlier. It might, I can very well say that for the time being, you can go ahead, it's not a big risk. But I would add, as I have been emphasizing, that it needs to go along with setting up a public debt management agency. And that public debt management agency, setting that up, giving it powers, taking away powers from RBI to SEBI, and doing the required changes in regulation in the market infrastructure, it needs to go together. So you need a general equilibrium approach.
But there are short-term measures and long-term measures. So what are the short-term measures?
You should not do short-term measures that are not in line with what you want to achieve in the long term. I mean, if you're going along a certain path, but every short-term measure that you takes you away from that path, then you'll never go down that path. So public sector banks, if we keep recapitalizing public sector banks, and not thinking at the same time about how we can have entry and exit of private banks to make this banking sector competitive, then just policy rates and complaining about they're not getting transmitted is not going to be the answer.
We get a lot of feedback when we see what our viewers are telling us after our videos that, oh, nice, you guys talk a lot of academic stuff and it's nice to theorize, but in reality, how much of this is possible for a government which has to take care of its economics and its politics and its fiscal math?
I think a lot is, and it's not very hard. The blueprints are there. So as I said, if the government is borrowing and it borrows through its independent debt management office and it has a bond market, setting that up, doing that is not hard. I mean, about 30 countries, including a large number of emerging economies, have done that. Almost every country actually is now moving towards that. We actually had a PDMA bill that was tabled in Parliament, and it just needs a bit of thought and effort, and many of those things are not even political. I mean, tell me, how many of our viewers, if you ask them, worry about how the public debt management agency is run? Yeah. So a lot can be done.
A lot can be done. It's not hard, is what Professor Patnaik tells us, but it's also about a lot of political will and for the government to be able to assess its decisions and its future path. Please keep watching Economics, and we'll come back to you next week and see how the government has responded to the feedback from industries and business leaders to try and correct and fix the slowdown. Thank you.